Welcome to another daily recap. Today is January 19, 2024. It's 9:04 a.m. Eastern. The market opens in 26 minutes, and there are 8 levels that have been calculated for this morning to trade against in the E-mini futures. As usual, we will circle back around after the market closes to take a look at how any trades taken at these levels have played out. The hourly chart from several days ago that gave several indications that there could be a trend reversal seems to be playing out. The pre-market, they're at 478.48, 478.50. And they've been climbing, so it looks like they want to break into all-time highs again. But we have levels to grab, whether they're going up or down, and we'll take a look at the trades this afternoon. This was the day. They busted through to new highs and closed strong on the day and the week. Let's take a closer look at how the trades played out at the 4 levels that the spiders hit today. They were under the 477.40 level at 9:45 a.m. And what would have been a great start to the day is if they came down and tested and filled this gap from yesterday and triggered a trade at the 476.40 level. Early in the day, you don't necessarily know where the initial push will be, but there were several indications over the past few days that they were going to try again for the recent highs and maybe even the all-time highs. But by the way, the all-time high was at 470.98 all the way back on January 4, 2022. That was 2 years ago. This level I had on the chart at 480.05, and I have it adjusted to 480 because that's the trigger point. It was there for a different reason. It just happened to coincide with a former all-time high. We'll get to that one later. But they did not go down and test this gap at the 476.40 level. And instead, when they did touch 476.35 from underneath at 9:52 a.m., the short position was entered, and they just shot up out of the money, almost 10 ES points before reacting down per the original design of the trade. But here in this 10:09 a.m. candle, they came back to within pennies of our base hit profit target. Close, but not enough, and they pulled back up again. In my book, this is a near miss. If this was kind of a sell the rip kind of market, going short and giving the trade a little more wiggle room would be fine, but there were indications everywhere that the bulls were in charge. So that's why what I really wanted to see was a long position down here triggered at 476.40 to start the day. But you have to take what the market gives you. In this case, the short here was aborted near when the spiders got back to slightly above the entry point. And going long at this point would have worked out as well as we can obviously tell after the fact, but I just stick to the rules. This one was a near miss and kind of close out the trade kind of scenario. So they played around here for a while and before they continued higher. And the next level was hit at a good time, about 12 or so minutes after 11 a.m. You can't expect it to happen every day, but often you'll see a mid to late morning high or low that gets put in while the spiders kind of take a breather. And another short trade in the E-minis was triggered when the spiders hit 478.93. It was a strong enough pullback to score a base hit at this level, so this was the first profit of the day. And then when it got near the 480.05 level, which is right here in this zone of the former all-time highs as we talked about, I expected one of two things to happen. One, they could react at the calculated level with the 5-cent buffer here and pull back to provide a base hit. Or two, the bulls would come flooding in, and if and when they break 480, they would just shoot up higher. And a short trade was taken per the rules, and it paid off. A nice quick pullback, another base hit. So now when they got above the all-time highs and started closing candles above it, it was pretty clear that the bulls were in charge at this point. In retrospect, I probably should not have shorted again up at the next level. It was kind of new, uncharted area up here, as it were, and anything could happen. But I trust my levels because I know they work the majority of the time. So this was another short up here when the spiders hit 481.09. It was out of the money almost immediately from the outset. The spiders kept climbing, and treating this as a process meant waiting for a fumble signal or a pullback for a base hit. Of course, the base hit didn't happen. And a fumble did occur when the spiders were, or the ES was about 8.25 points out of the money. And reversal at that point gave a very quick base hit when they pushed up farther around 230 or so. And after that, there were no other levels to keep an eye on. It was clear now that the bulls were on a mission to break into uncharted territory. We'll see what comes of all this next week. On the weekly and the daily and all the shorter time frame charts, everything looks very strong. But the month still has another 8 or so trading days left in it. And by the way, the timing of the monthly chart is interesting. They're at an important place, obviously, but the time that it's taken to get there from a monthly perspective is important too. I'm not making any predictions either way. I just prefer to take smaller, more finely tuned trades in the E-minis from an intraday perspective. But there will be new levels to trade against every day, including next week, even if they're exploring higher and uncharted space at that point. The first trade was a wash when they couldn't pull back enough to provide the base hit and instead kept going higher. And by the way, I ran the numbers to see what would have happened if I stayed in that trade and waited longer, either for a fumble signal or a base hit, whichever came first. And they would have fumbled at about 4.5 points out of the money, so not too bad. And a solid base hit on the reversal. And you could have even ridden that long position up to the next level on a trailer or something. But keeping with the rules, a straightforward fumble and reversal would have essentially been a wash anyway. Just want to point that out since it was an option on the trade. And the other base hits on the pullback to the next two levels were typical. And the last trade was the fumble, where 8.25 points were given back to the market, and the base hit on the reversal helped clean up some of that fumble. So a handful of points shorting against a pretty strong uptrend today. It pays to know the numbers. So that's a wrap for today. I hope you find these videos interesting and helpful. And if so, consider leaving a comment, and I would appreciate if you would subscribe. That would help the channel gain some traction. Thanks, and have a great day.